Well, hello traders and investors. I'm L.A. Little and this is your daily NeoTA wrap. We're taking a look at these markets and we're doing it from a neoclassical perspective. And each time we're asking ourselves, what happened today? On those charts, what do we see supply and demand as? What does it tell us? How can we use that to know what's going to happen on the coming days? I do this show 4 times a week, every Monday through Thursday. It's broadcast at over before 10 o'clock Eastern Time, archived on YouTube, and it's on of a channel L.A. Little. And we do a lot more than just, what you see here on a nightly basis. One of the things I added today was this day trading ranges in the bell curve here on your resources. It's open to anybody. You can pop in here. There's a video. I'd welcome you to come take a look at it. And what it's really doing is it's talking about these chat rooms, the TNT room in particular. It's a chat room in there that people subscribe to. They come in, and every morning we give a range, where the range is expected that day, where it would be a trend versus a range trade for the day, and that's for anybody trying to make trades on that day. And you can do that, across any time frame, any instrument. We happen to do it on the NQs, the ESs. We may expand that over time, but right now we're experimenting in there. But it's kind of a fascinating piece of work that we're working on. We're going to publish an article on it, day trading ranges and the bell curve. So check out that video when you get a chance. So let's move to the markets, what's happening with them. Last night we were looking at the charts. We still did not have any failures anywhere. And so I couldn't give you a hard call because there was no clues telling us that we were going to get that move down. But I did say last night, in particular towards the end of the show, right at the end actually, that we're going to see a pullback, either today or tomorrow. It was coming. You could see it coming, right? And it's because we stretched. We stretched so far. In particular, we stretched so far right here as a result of stretching so far right there. And that, in a nutshell, is what happened. We had oil down today, down almost 4.5% or over 4.5%. Russell gets hammered, right, as a result of that. 2.5% down, 1.25% down on the NASDAQ broad. NDX actually held up the best. Of course, that's the one that's been lagging. And then you had the S&Ps drop 1%. Silver, gold, they all got hit. Overseas markets got hit. They're going to get hit again tonight. Nikkei down big. Dollar up big. Dollar down big. Nikkei, the yen up large. That's going to affect their markets again tonight. That read coming into today was really just a read based on, what you could see in terms of extension taking place on these charts. And I'm going to start with the Russell here and show you that extension. And I pointed it out last night, every move on the way up for the last 9 days has been 1%. That's just uncommon, right? And you can always understand what kind of market you're in by the angle of ascension. When you get a fast, straight up move, they're not sustainable. You got to go sideways for a while at worst, right, to kind of work it off and allow you to go again, and then you get another one. Now, this one's not as vertical as that one, but it's not coming off the lows, which is where you typically see that. It's coming after a partial move already. Breaks a swing point high, has a little pause right there as it breaks it, right, and then just jams it up higher again. And then today, of course, they give it down big, and that's because of the oil market driving this market. So anyone, I was telling one of the members yesterday, they were talking about gold and wanting to get in gold, and I was like, well, any time I make a trade where I'm trying to piggyback something that's been going this vertical this long, I'm guaranteed to lose. You just got to look elsewhere, or you got to be patient, but you can't just try to piggyback that move, because almost inevitably you're going to be the one. If you bought this anywhere over the last 3 days, then today you lost money, right? If you didn't get out, you lost money, pure and simple. If you bought it anywhere over these 3 days, you either broke even at best by the end of the day, or you lost money. Folks, you just can't piggyback these things. They give it up a lot faster than they get it. And when you're getting it at 1% a day, you know you're going to give it up big at some point. So that's the Russell. So what does it tell us? Nothing really. You just got a big sell-off, no volume. Just a pullback after an extension that made no sense. NDX, the NDX, as I said, held up better. Now, the reason the NDX held up better is because it wasn't as extended as everything else. And if you bring it in here and you look at it, what is it doing? It's doing a bullish retest regen. In other words, you break a swing point high, you get over it, you come back into it within 6 bars, means it's probably going to try to get to the bottom of the bar. Now, the bottom of this happens to be both the bottom here and the bottom on the breakout bar. You take the volume on that, take the volume on this one, whichever one's the highest, you compare it when it comes back. Tomorrow potentially is when it's going to come back, and that's where you see what you got. That's the NDX. And NASDAQ comes back a little bit harder, coming back to try to do the retest, regenerate. And the S&P 500, now it has been much stronger, and as we've been talking the last few days, it's doing a bearish retest, regenerate after way more than 6 bars, right? And when you do that, more than 6 bars, odds are very high that you're not going to make it to the other side. You're not going to get over it, and you're not even going to get to it. In other words, you're not going to do a full retest off that swing point lows high. Sure enough, flips around. It's back underneath the low, so it's trying to quote-unquote regenerate back to the downside, to the direction of the break. Now, in this particular case, because it extended so far, the retest regen is back here. It's already tested it once. This would be the second time. If it does get that deep, right, that would be a little bit more in a coin toss that it would hold and try to quote-unquote regenerate to the top side. So we could see, this type of action take place here for a while, based on it. In other words, we could go up and down for a while before we finally decide, are we going to get over this? Or is this really going to regenerate and take us lower over time? And so that's the setup there. You can get a clue as to what's going to happen tomorrow as it tests into this bar. That bar, why that bar? Well, that bar actually has a decent wide price spread. And so as it comes back into it, it gives you a bar of significance. And in neoclassical, you're always looking for bars of significance. Once you find them, then you can measure what happens when they get tested. And that is what we look for with respect to clues. Overseas, really nothing there. If I look at the OX markets, not much there other than the fact that some of the silliness that has taken place starts to get hammered back the other way. I'm just going to look at a few of these with you. Here's the USO. Of course, this is not a great one-to-one with respect to the WTI or the Brent or any of those. But, it was over the swing point high, mimicking it in that way. Today, what does it do? It does a full reversal. A takeaway bar is what I call it. Doesn't have the volume, does a takeaway. I suspect this, getting back to the neoclassical reads, it's coming back to do a bullish retest regen, right? So what does that mean? It's going to try to get to the bottom of the bar. It's going to try to get into this area. When it does, that's where it should try to hold. And that's where we can measure what it's really going to do next. If we look at the bonds flipped around. They were up heavy today, but they had a bad candle. They tested into this high volume bar. I saw the moderator in the TNT room today putting a short on right there. It was a perfect call. That's where you want to put the short on, right? That's the call. You're coming into a lot of stuff here, folks. You're coming into this bar, right? That's this big volume bar. You're coming into the top of the breakdown bar. You're coming into everything where it should fail. That's the ideal place to put your short on because you don't have to risk hardly anything, right? You put it on. You put your stops just up above. If it takes off, it takes off. If it doesn't, well, it's going to come back down, try to test the other side. That's what it does, and that's how you put your trades on. Silver, gold. Now, silver still hasn't picked up with respect to the kinds of moves that we've seen in the gold market. And so if I pull up the silver chart here, you can see, even though it's got this nice big spike up, it never even got over the highs on the spike. Now, if you go look at the gold, gold got over it last night. We talked about it. As I've always told you, I'd like to see an extra bar to tell me it's real. Well, maybe it's not. Coming back down the other way, no huge volume, but it's still testing those highs. Folks, when you get, and I've talked about this at length already in some videos. If you want to watch them, go over to the front page and check them out. But when you get that kind of move and you get this kind of volume, it's a blow-off move that's probably going to contain price for some period of time. And you can see that's exactly what it's doing up here. If you're buying it up here, just like that IWM Russell we were talking about earlier, you're asking for them to take your money, most likely. We got the Euro, nothing really happening there. We got the ECB on Thursday. That's going to be the next big spot. And that's about it, right? I mean, we saw some stuff in some of the sectors, but essentially you had big moves in places that are not sustainable. Materials, energy, right? Those are not sustainable. It's certainly not in the form that they went. Crude oil went up almost 50% in 3 weeks. And the oversupply is just as bad or worse than it ever has been. I mean, I know that we could be turning, but come on, 50%, give me a break. That's just not real. That's a massive short squeeze. And as soon as those natural buyers, the people that have shorted and now have to come in and cover those shorts, as soon as those buyers are gone, boom, right back down. That's what we're starting to see. I think you're going to see some more pressure in the morning. Then you're going to see it, square away and wait on the ECB come Thursday morning. Folks, thanks for joining me. Tell a friend, tell two, I'm LA. It is and was your daily NeoTA wrap. Have a great night. I'll see you next time. Good night.